Welcome to fall, to quarter four. And as we move into quarter four, is the real estate market going to stay as red hot as it has been all summer? Or are things going to start to cool off a little bit, just like those temperatures outside? Hi, this is Andrew with the Andrew Smith team at eXp Realty. And one of the number one questions I receive has to do with, is now a good time to buy, right? Or I'm going to wait to buy because prices have gotten just insane. They're way too high. And it's a legitimate question. I mean, the real estate market in 2021 has been on absolute fire. And so in this video today, I want to break down the two concerns people have as we move into quarter four. And I'll be honest with you, even a lot of the experts out there are a little bit undecided on what quarter four is going to bring, because normally this is the time of year when the market starts to slow down. And last year that didn't happen. It's everything stopped in the spring because of COVID. And then the market kind of shifted out and it got very, very busy all the way through the fall and the winter. So what are we looking at this year? Well, I want to start talking about mortgage rates. And today, mortgage rates jumped over 3% for the first time in quite a while. They didn't go far over 3%, but they're at 3.01%. And that's a big deal, because we've all gotten really accustomed to those record low mortgage rates that we've been having, 2.75, 2.8%. And those honestly of what have been partially responsible for fueling the demand that housing has seen. Now, we have to keep things in perspective, though. If we go back just a year, so in January 2020, interest rates were 3.7% on average. And it's after then that they started to decline. Well, they've been on their way up for the last few weeks. And that's not necessarily a bad thing, as interest rates have a tendency to drift higher when the overall economy is doing better. And that's one thing that we all want to see. We want to see the economic recovery continue. Now, I will say that it's not expected that mortgage rates are going to soar substantially, but they are going to continue increasing. Next week, I'm going to do my real estate market update for the month of October. And as I'm putting together the information from that, I'll give you a little or a little sneak peek, I should say, that it looks as though rates are going to go, according to most forecasts, to about 3.5% by the middle of next year. Now, that does make a difference if you're in the market to buy a home, because obviously, as mortgage rates go up, homes get more expensive. And a 1% increase in a mortgage rate decreases your purchasing power by 10%. So use an actual number. Let's say you're pre-approved for $500,000 right now. If the mortgage rate was to go up 1%, that pre-approval is going to come down to $450. You would lose 10%, which isn't necessarily ideal in an appreciating market. Which brings me to the second point to cover today: home prices. One of the main reasons people have kind of stepping out of the market for a while is that home prices have become just too expensive. And I understand that. I mean, completely. Home prices have soared. But I think we need to take a little bit of a look back and also have a tendency to say, what do we think is going to happen going forward? So if we take a look back to the height of the market, 2006 is when home prices peaked. Believe it or not, based on the change in interest rates, mortgage rates, it is actually the exact same to buy a home now as it was in 2006, cost-wise. Since then, home prices have gone up 41% on average cumulatively over the years. Wages in that same time have gone up, according to the Federal Reserve, 53%. So the wages have continued to outpace that. And with record low mortgage rates, that is what's kept home affordability in check. Now, I will say that we just received information on the new loan standards, and a conventional conforming loan limit has been raised to 625,000. It's the biggest one-year increase we've ever seen. What does that mean? That means if you're utilizing conventional financing, even a 5% down conventional, that loan can now go as high as $625,000 and not be considered a jumbo loan, which is going to help a large number of people out there tremendously. But back to home prices. They've been soaring. They've gotten crazy. I openly admit it. In fact, Bill McBride from Calculated Risk, and check out his blog. It's a great blog, and he's got very good information. He actually predicted when the market crashed last time. And here's what he has to say. He goes, the Case-Shiller national growth rate of 19.7% in July is probably close to a peak, and year-over-year price increases will slow later this year. Now, again, when he says the price increases will slow, he doesn't say prices are going down. He says the rate of appreciation is going to slow. Now, very similarly, Ivy Zellman from Zellman and Associates, and I've quoted her many, many times. She says closings are set to decline roughly 10% year over year in the second half of 21. Okay, now I'm going to pause there just for a second. Understand that closings are going to be down because inventory is down. Okay, you can't sell what isn't on the shelf, right? So the fact that year over year closings are going down does not mean that the real estate market is in trouble. What it means is there haven't been as many homes available to sell. All right, now the second part of what she has to say is that home price appreciation is on the cusp of flipping to a decelerating trend. Okay, now again, that could be misconstrued. She doesn't say home prices are going down. She says home price appreciation is going to flip to a decelerating trend. What that means is home prices have been on an accelerating trend. Month over month, year over year, the pace of appreciation has continued to climb. What Ivy's saying here is she expects the pace of appreciation will start to taper off, come back the other way. That's something I've been predicting for a while based upon all the information that I have available currently. Now, the latest home price expectation survey was just released, and here's what they say. And in the home price expectation survey, they're looking at major mortgage bankers, the Federal Reserve, Fannie Mae, Freddie Mac, and they're compiling all of that data to say, what do we, if we average all of this out, what do people say home prices are going to do? And right now, the estimate is that homes will continue appreciating all the way through 2025, not at the current pace. Right now, the consensus is that homes will appreciate about 5.8% in 2022, and then it will drop off to a much more normal 3.5 to 3.9% annually in 23, 24, and 25. But let's put that in perspective, especially if you're sitting on the fence now wondering if you should buy or not. When you take the expected home value change in each of the next several years and you pile all of that together, you compile that cumulatively, and you look at mortgage rates, here's what they're saying. Cumulative appreciation expected on homes through 2025 is 31.8%. That means that they're expecting the average price of a home today to be 31.8% higher at the end of 2025. So that pace is coming down, but it doesn't mean that home price appreciation is going to stop. And as mortgage rates continue to inch up, that's going to make home buying even more expensive. Now, obviously, it's going to vary from market to market. And I'm happy to put, if you visit my blog, I've got it linked below. I have some more detailed information on some of the local markets I work specifically in Frisco and Prosper, Texas. But right now, I mean, it does look as though the peak of the home price appreciation we've hit. Great news for homeowners, right? They've actually accumulated a great deal of wealth and equity over the past couple of years. And for buyers, what I'm expecting to see in quarter four is I was actually out showing some new homes over this weekend, and there's a little bit more inventory available. There's actually homes without offers on them or without anyone lined up for them, without a waiting list. They're going to be completed in February, March, April. That's a change from what we've seen as the builders have started to catch up. As the builders catch up, that's going to take pressure off of the resale market, which means that you're not going to see as many bidding wars and you're not going to see these rapidly escalating prices that we've become accustomed to here in 2021. But if you have any questions whatsoever about your specific situation, or you want to know if now is a good time for you to consider buying or selling a home, please feel free to reach out. You can always reach me at 888 447 9650.